the United States achieved its borrowing limit of $31.04 trillion on January 19. This might precipitate a financial catastrophe in the United States within the next several months. The dispute in the United States over the removal of the debt limit. Congress is screaming, but neither Republicans nor Democrats seem willing to go ahead. According to US Treasury Secretary Yellen, who responded with a letter to Congress on the debt limit problem. The suspension of debt issuance started on January 19 and will extend until June 5 as a consequence of the Ministry of Finance's usage of the debt limit. Despite exceptional attempts to avert default, many anticipate that the United States will default on it. This would entirely reverse the financial and treasury markets sometime in early June. While the U.S. Treasury is pausing the production of US Treasury bonds in an attempt to rescue itself, big investors from central banks across the globe are removing or reducing their holdings of US Treasury bonds. Foreign private investors will enhance their demand for US Treasury bonds in November 2022 too. However, according to the most recent Treasury report on foreign capital released by the U.S. Treasury on January 19, global official entities such as central banks and sovereign wealth funds sold US Treasury bonds for the 10th month in a row. It is one among the top 38 foreign investors of U.S. Treasury securities, according to the U.S. Treasury. In November, most holders of US Treasury debt raised their holdings, including Japan and the United Kingdom. Only China and the Cayman Islands, which placed 6th among the 10 biggest foreign holders of US Treasury securities, decreased their assets. According to the statistics, China sold US Treasury notes worth $7.8 billion in November of last year, the third large month in a row. However, the magnitude of the sale was substantially lesser than in the preceding 2 months. According to a U.S. Treasury Department report, inventories of US Treasury bonds in China plummeted to an all-time low of $87 billion in November 2020, the lowest level since May 2010, when China owned less than $1 trillion in U.S. Treasury securities for 7 straight months beginning in May of last year. China continues to own the second biggest amount of US Treasury securities behind Japan. Japan boosted its Treasury holdings by $17.08 billion, snapping a 4-month skid according to the T report. Japan's holdings of US Treasury securities grew to $1.820 trillion. This is still a 3-year low, despite the fact that Japan is the sole nation holding trillions of dollars in U.S. Treasury securities. The Bank of Japan resolved on January 18 to keep its ultra-soft monetary policy after its first monetary policy meeting in 2023, ruling out the chance of a short-term change. However, if the BJP loses control of its financial system, it is likely to turn hawkish in an effort to discourage the use of US money. Wall Street is reportedly afraid that Japan will continue to sell considerable amounts of US Treasury notes in January to maintain the yen and Japanese bond rates. Several Fed governors reiterate their support for a quick hike in the target rate over 5. The Federal Reserve Bank of Louis James Bullard forecasts that interest rates will need to be raised to a range of 5.25 in order to reach the inflation objective. This suggests the highest danger of heightened volatility in U.S. Treasury securities and will hasten the pace at which foreign central banks remove money from US Treasury assets. The U.S. has also taken advantage of the hyperinflationary environment to boost the amount of US Treasury bonds issued in order to swiftly offset the expenses associated with debt issuance, making the auction of 2-year U.S. Treasury notes for $32 billion on January 18, the worst transaction ever. According to economists, this is similar to a gradual covered default on U.S. Treasury bonds, and it has already resulted in a drop in long-term U.S. bonds in 2020 until the end of November 2020. It is expected that China and Japan would continue to sell $700 to $900 billion in US Treasury bonds. Since the Federal Reserve started increasing interest rates in December 2017, foreign central banks have liquidated $736.09 billion in net U.S. Treasury bonds. In stark contrast to this is a rise in the quantity of gold they hold. According to a Globe Gold Council survey released on January 18, the rate at which central banks throughout the world buy gold is faster than it has been in more than a year. There was no longer any link between the dollar and gold as of November of the previous year. According to data, the record for the most straight years of net gold purchases by central banks worldwide was established for 13 years, totaling 56.92 tons. After the initial addition of 32 tons of gold to their reserves, the world's central banks received a net quantity of gold equivalent to 50 tons in December 2020. China ordered an extra grid, 30 tons of this metal, in November of the same year. According to historical statistics, this deal resulted in the acquisition of a substantial sum of gold. If China begins to grow its gold holdings, it is quite likely that it will continue to acquire gold for many months. The Globe has just made import data public. The Golden Council and Customs are on your side. According to figures issued by the World Gold Council, China has kept its gold imports relatively high. By November 2020, to total of 138 tons. The quantity of gold imported by China in the third quarter was 512 tons, well above the quarterly average level seen since 2019. China imported 1186 metric tons of gold in the first 11 months of the 20th century. This means that 1186 tons of gold were supplied to China from major gold markets such as the United States, the United Kingdom, and Europe in the first 11 months of 2022. Some of this gold may have gone into gold reserves. According to the expanding amount of facts, U.S. Treasury bonds, the major asset of the U.S. currency, are presently bankrupt, and they are only kept afloat by the overpriced U.S. dollar index, not by, "This is the only way to keep us Treasury bonds valuable," the current benchmark by which all global asset values are assessed. Gold is a more secure investment than US Treasury bonds, a traditional safe haven. The Federal Reserve System and the United States Treasury believe they have the capacity to impact the value of the money and securities issued by the United States Treasury. This, however, is not the case. According to the Ministry of Finance, which was released on Monday, China had a U.S. debt of $980.8 billion in May, which was $23 billion less than the previous month and about $100 billion less than a year earlier. For the sixth month in a row, China has reduced its treasury assets. Japan is now the biggest foreign holder, having cut its U.S. debt to $1.212 trillion in May from $1.218 trillion in April. Total foreign debt investments in the United States declined to $7.42 trillion in May, down from $7.45 trillion in April. Beijing is attempting to diversify its debt commitments, while the Federal Reserve's interest rate hiking cycle, which started earlier this year, has resulted in lower U.S. bond prices. The central bank hiked interest rates by 75 basis points in June. Wall Street anticipates a similar hike at the forthcoming July meeting. Simultaneously, China is establishing a yuan-based foreign currency reserve to compete with the dollar and help other economies in trouble. According to currency history, the Federal Reserve System releases substantially less regularly. Leave your thoughts in the comments. Click here to view a video about another frightening project,